Hi everyone, happy holidays from my family to you. So, do you know it is possible for you to earn from rental income without necessarily owing or owning any properties? So, today we are going to talk about REITs. And REITs in full is real estate investment trusts. So, just to give you a glimpse of what REITs is, so these are companies that own, operate, or manage income generating properties. And one thing with rates is it operates by pulling money from investors, and it uses this money to, let's say, build or construct malls, warehouses, apartments. Then from the income it generates, it pays dividends from all their investors. So one thing about rates is we have several real estate investments that you can invest in. They have equity rates, and equity rates is whereby the investments or the income is earned through rental properties. So they build these properties, lease these properties to tenants. Then based on the rent that it generates, that is now when how it makes money. Then another one is mortgage rates, and on mortgage rates, the source of income is interest rates generated from the loans, or rather the mortgages that they have put out there in the market. So we all know how mortgages work. You take a mortgage and you'll be paying for that mortgage on a month-to-month basis until you complete the entire amount that is required. So based on those interest rates, if you invest in mortgage rates, you'll be adding specifically from the interest that it generates. Then another type of rates account, we have hybrid. So a hybrid is of both the equity and mortgage. So you are earning both from the rentals, and you're also earning from the interest rates that people are paying on a month-to-month basis for their mortgages. Now, why invest in REITs? And the first thing is accessibility. Because unlike, okay, like right now, if you want to be a landlord or if you want to own an income generating property, it means you have to have a lot of money for you to be able to buy land, develop that property, then start earning from it. But if you want to invest, let's say, in REITs, it is easy for you. If you have, let's say, 50,000, you can simply go buy the shares and start earning from that. So accessibility is guaranteed. Then liquidity, because you see, when you're going in the stock market, apologies for that, you can either buy or sell your shares and earn from that. So it is highly liquid as compared to somebody who, let's say, has apartments and they have to look for people to either come and rent or buy those apartments. Then another thing, it is stable income, because as per law, all the REITs investors must pay out 90% of the income generated from their specific properties to investors, and they only maybe retain 10% for their external management issues, but 90% must be paid to investors. So this guarantees that as long as you have invested in a REIT, you have REIT investment, you have steady income. Then diversification, as you've heard, I've told you types of rates. We have a hybrid of both equity and mortgage rates. So basically, you have diversity on what property you want to invest in. Do you want to invest in mortgage rates? Do you want to invest, let's say, in equity rates? And where do you want to invest in? So this gives you too much options as an investor, because you have the option to choose from. They have so many options, so you can diversify your investments. Either have a hybrid, either go to the mortgage rates, either go to the equity rates, etc., etc. Then we also have risks in rates, and one thing is market fluctuations. Because remember, what you're looking for is like in stocks. Market fluctuates. You might find that the payouts are, let's say, ranging from this percentage. The next time the payouts are ranging. There is that market fluctuation that affects the income you as an investor will be paid out when it comes to the dividends that you're earning. Then economic downtime. So during recession, basically no one is buying properties, or rather, if they're buying properties, they're not buying with the market value that it was projected to bring in. So the economy downtimes, when there is recession, you should also expect that your income as an investor in the REITs account will definitely go low. Then interest rates changes. At times maybe you come in and the interest rates are too high, then based on the market fluctuations, economic stagnation, we might experience some downfall as far as the interest rates are concerned. So this is also something that you as an investor must know, that the interest rates is not stable. The economic downtimes and the economic recession might also have a negative impact to the payouts that we will be receiving as investors. And lastly, the market fluctuations will also be able to affect the returns you will get as an investor. So how to get started with REITs? So first of all, you need to approach, let's say, a broker, because these stocks are bought from the Nairobi Security Stock Exchange. So basically, when you want to, let's say, be in a position to be able to purchase these stocks, you must have a CDS account, and that is the Central Depository Systems. And for you to be able to have a CDS account, you must look for a broker. When you go to these banks, you will be able to just tell them, okay, I want to invest in, let's say, shares. I want to buy some shares from a specific account. I want you to kind of advise me or to refer me to a more reliable broker, and they'll be able to take you or refer you to that specific broker. Then once you go there, they'll be able to help you create a CDS account. Personally, I've used a specific broker, and I also have a CDS account with several shares that I've bought from several companies. And in fact, the person who introduced me to this kind of investment was my late father. He just came and told me, I have stocks for these companies and I want to give you. So basically, for me to be able to acquire those stocks, I had to go and open a CDS account with a certain broker. So when I went to open a CDS account, I was now able to do investments, buy shares through the Nairobi Security Exchange, and I think that has also gone well. So once you have already opened the CDS account, you then deposit money into your broker and instruct them on what kind of shares you want to buy. There are only 4 stages. These shares are bought through the Nairobi State Security Exchange. Open a CDS account, identify a broker, open a CDS account, then you're able to deposit money and now trade through the Nairobi Security Exchange. And I believe if you follow those 4 steps, I think you will be in a much more better position to start your investment in REITs. Then one thing we need to do is we need to do a comparison between investing in REITs and having your own property that you want to develop. And the first one, I told you, accessibility. REITs, you are able to access it with as little as 50,000, 100,000. You're able to start investing in REITs, as compared to direct investments, where you'll first have to either acquire more capital for you to buy the land, then develop it, or rather take a huge loan to help you facilitate the development of that specific land. Then another thing is highly liquidity. It's highly liquid because I told you that through the Nairobi Security Exchange, you're able to sell or buy shares, and that gives you the opportunity to sell, to remain highly liquid, okay? But as compared to when you're developing your own property, and let's say you have, let's say, like 20 apartments, and you want to sell them, first of all, when maybe we are having an economic, or rather we are having a recession in our economy, you might find it difficult for you to dispose of these properties at a quicker rate. And even if there is no recession in our economy, still selling these apartments might take time for you to find a buyer, then you sell them, and that is now not a guarantee of that property being highly liquid. Then management effort, because when you're investing in REITs, you're not the person who's managing it. There are other people specialized to manage that, and these are professionals. But when you've developed your own property, then you must have some direct management of those properties directly coming from you and the people that you'll have employed to assist you with that. Then diversification. In REITs, you are able to choose where you want to invest, or where you want to invest your money in. You are either able to choose from mortgages, equity, or a hybrid of both. But when you are developing your own property, that is your only investment. You technically do not have options to diversify your investments as far as that is concerned. So what I'm going to tell you is investing in REITs is something that is very good. You can earn you can be a landlord, you can earn from rental income without necessarily having to develop your own property. So if, let's say, you have 200,000 and you have limitations to other capital, but you want to develop your own apartment, you can take this amount, first of all, go and invest it in a REIT account, then use it to generate income that will help you build or develop your own property. So that is just everything around REITs. If you have any questions around this matter, you can feel free to send me an email or ask a question on the comment box, and I'll be able to assist you further. With that said and done, happy holidays once again from my family to you, and I want to thank you so much and wish you all the best.